All right, folks, welcome to a trade recap. This trade was executed in a live stream. We made money, but we made a mistake here. I So the trade just hit stop loss a couple, 30 minutes, 40 minutes ago. And looking back at this trade, I should have not even took this trade. Although cool, we made money. I made only one RR, by the way. I The reason I made one RR, all that said, I made four RR, and percentage wise, I only made 1%. Usually, when I say percentage, I mean in when I say RR, I usually mean it percentage wise. I don't say in basically RR. So I could be risking 0.25% and say 4 RR. Doesn't mean I actually made 4 RR. That means I made 1%, right? So we have to name it right. And on this trade, I only made around 2%. And when I trade hit stop loss, I lost 1%. As you guys know, I don't break even unless it's Friday and it's 4:30 p.m. and the trade still has not TP. Otherwise, I do not break even. But although we did end up in a win on this trade, we ended up in a small win, just 1 RR. We were up. My account was up 9 RR on this trade, right? And then when I was up 9 RR, it was 9%, not 0.25% and 9 RR, right? It was up 9% because I risked 1.5%, and the trade was up 9%. I was like, man, I'm gonna hold. And I know I made a mistake on this trade because it seemed off a little bit because it looks like to be a near continuation here. And the near continuation didn't do a deep retracement when it's supposed to do that. So that's the whole reason I was like, I'm not gonna get out of the trade. Although I'm not up 9%, this could literally give me out a draw to make a lot of profits. I was like, yes, I'm supposed to preserve capital, but the lesson is more important than me actually preserving, because if I'm losing, I'm losing a little bit. If I'm winning, I'm making it. But overall, this is not down to the capital. So if I could, lose more, it would be better for me in the longer term. So I was like, okay, I'm up 9%. I'm not gonna get out. I'm gonna hold it. The reasoning was simply because I don't break my rules, and this trade unfortunately broke our rule. And you can see there was an OTE to the downside. I thought this was just an OTE to push it back up, but everything could be patternized. And this trade was supposed to be in this trade, so I am regardless happy with this, with a 1 hour gain when it's supposed to be a loss, when it's supposed to be no trade. And yeah, let's get straight into it. We're gonna talk about the lesson why that we made a mistake and the lesson of the trade, because we made a big lesson. We're not supposed to execute the trade at all because OTE, and the OTE was from this specific area, and OTE mark never got met. So I was like, because when I traded the chart, giving you a little insights of the future, when I was trading around here, I did not see a OTE. I forgot to mark out the OTE. So now I added the rule, and I said to mark it out every day. Every day look at there's gonna be an OTE here, right? I said for a near continuation setup, if there's an OTE, I only take the trade if the price taps the 0.50 to 0.86 Fibonacci zone. If I have an entry but the price hasn't reached the golden Fibonacci range, I do not execute the trade. Execution only occurs when the 0.50 to 0.86 retracement is tapped. I must always see if there's OTE every day. I cannot forget it, right? In this case, I forgot it, right? So I said I must always see if there is a OTE every single day I'm trading, right? During every single day of the trading session, I cannot forget this OTE, because today I didn't look back here. I just used a new continuation rather looking for the OTE. And I did say, and I did tell trader that the OTE already happened, but that OTE was for the London session. So if you guys trading London session, that was a beautiful long you could have took into the upside. Just do a pullback, long it off with a 30-minute CRT. You guys can use 30-minute CRT if you're very advanced, right? But most of the time, if you don't have to use a 30-minute CRT, do not use it. But usually if there is no auto CRT there, the 30-minute CRT can definitely perform there for it very well. See, 30-minute CRT was the one to perform, and was the one to deliver only after the retracement has been done. Now, going to the higher time frame, today was very clear. We had a weekly short-term look was right over here to weekly 50 high, and the long-term look in the weekly 50 to the weekly CRT was down right over here in the weekly auto block. So I was looking first in the lower time frame, long-term look to be the upside, which is the daily ERL. As well, we had a daily SMT ERL to IRL. I mean, daily IRL SMT to ERL, daily SMT CRT to the upside. As well, we had a what else we had here? We had the manipulation candle ended, so I'm looking for this candle to expand. That's why that's why this specific trade delivered very well, but fully reversed was simply because of this candle was meant to be a bullish candle because why? Accumulation, manipulation, SMT, and eventually distribution. Right? When it distributes, it's gonna expand regardless. So that's why this trade let us live and see another day, right? And although I didn't make even a trade, right? So one trade I got out, and then I let the runners run. The runners were 1%, right? Runners. So eventually, was like, okay, the 1% went to 9%. I was like, if something feels wrong here, I'm gonna hold, and I found the answer out. So in the lower time frame, we had a daily range, super low, super high, stable low, stable high, premium discount, weird tab, discount, daily range high, as well as we had a new situation. Keep in mind, it was CRT in the Asian session for a specific day. That's what I fucked up on. So we had a bullish order flow. That was enough. And marking out the OT from here to here, there was a fucking OT that we could have longed up. Although, yes, we made money. But next time, the reason we survived this was primarily because this candle is going to be bullish anyway. Because this candle is going to expand regardless because of the daily manipulation candle ended, so the next candle can be expansion candle. That's why this overall delivered, right? So that's why it's very important for you guys to, even if you make money, don't fucking forget to learn. Don't forget to have the lesson. Now we had a new contribution. We had no forward CRT, and the hourly time frame says we have no forward CRT going to hourly CRT. We had a hourly. This is our biggest range in our CRT. This is our range high. We always got to mark it out always, even if we not take profit. So because we know that okay, the range is not, we're trading in the range still. So in the hourly time frame, the 3 a.m. was our CRT. The 3 a.m. had an SMT CRT with GU. As well, we had another CRT at 6 a.m. and eventually we had another CRT here. Eventually, we use this CRT as execution as well. But this one thing we gotta keep in account that if you have a bigger range, and the bigger range doesn't have SMT or soup, we cannot use a smaller range as a trade. We must wait for that bigger range to have SMT or a soup. Why? Or getting broken above it or below it. Why? Simply because the smaller range is gonna give a setup, but it's gonna be a juke. It's gonna be like psych, go right down or go back up. Market does that, right? So that's the next lesson, which is basically to only trade if there's a bigger range. Only execute once that bigger range has SMT or total significance at SMT. So we're valid to execute. And the next thing is that we must have. What was I gonna say? And the only time we execute in the smaller range on this bigger range is when the bigger range has either SMT or CRT. So if this bigger range has SMT, we could use a smaller range just execution to target the bigger range. Simple as that, right? So, but the bigger range must be souped or has SMT. Otherwise, we can use a smaller range to execute or anything like that. We must primarily stick to the bigger range unless the bigger range has SMT or total soup. Then we can use a smaller range just to execute to the bigger range. And yeah, that's the next lesson. But the higher time frame, we had a new situation, but we should have rounded this trade at all. It's because the OTE never got met. So now going down to lower time frame for execution of this trade, we had SMT, we had another, soup, and we had another SMT right over here. Eventually, we're looking for only total soup entries. So we souped out the low. We get the right market confirmation with this candle, and eventually I'm only looking for this entry right over here, which is from this wick. Why not this candle right over here, all the way down there? But simply because this candle was, still respected because the If this can never close below this candle's wick. So this is overall our rejection block to the soup trade. And eventually the reason why I entered here and not here, and then another reason is because they're far away. Sometimes you will get left out and just go up or higher, right? Because when it goes down here, it's deep. So we got in, we concentrated a lot. We put a stop loss down here. We put a couple stop loss, couple ticks below it because we're going the higher time frame. And it's Monday through Wednesday. And eventually, we can let the market breathe. And eventually, market expanded, hit our first take profit to the high, and eventually I cashed out for a 4 RR, which was only a 2% gain, 0.25% gain, right? That's what we cashed out on our first take profit, which is basically 4 RR in the technical ways. In the RR base, but coming to the risk, I risked about 0.25% on the first trade, and I had a 1% runner. So I had a whole 1% runner, which went to 9 RR, and eventually fully reversed. You gotta probably wonder, like, bro, why did you not get out 9 RR? That's fucking a lot of money. Keep in mind, that's 1% though, right? That's like 9%. That's a good amount of return. But my goal isn't to fucking make money like that, because if I make money like that, I may gaslight myself. I may do things that does not benefit me at any sort of way. Because if I fucking win this, I get out, and I don't know the lesson. I don't know the lesson of this trade. I am going to fuck up next forward on. Right, next time I may, because if I had 20K, I'm risking 5%, which is 1,000, and if I lose 1,000 per trade, live capital. You know what I'm saying? That shit stacks up. That shit will fuck up your emotion even more. Although it doesn't affect me at an emotional way any way. It doesn't affect me at all. But we do not want to be gaslighting ourselves fucking by profits. We want to learn the lesson. That's why I didn't break even, because my rule said do not break even. I just didn't get out at all, right? And I let it fucking go hit my stop loss, which is a 1% gain. Cool, 1% gain, but you know what I'm saying? It should have been a loss fully, because I didn't deserve this 1% gain because I made a fucking mistake. You gotta be ruthless to yourself, because if you're not ruthless to yourself, you let this shit slide. This shit. I know most of you guys trade, platforms and fundits. If you go to live account, this shit would drain your account. This will drain your shit. And when you spiral this, guys, when you go on live account, you're not losing, you don't breach your account at 10%. You breach your account at 100% loss. So that right there is going to itch the shit out of you. Right? So you want to be careful, and you want to have a beautiful thing. As well, we had another SMT with this low. So I was like, okay, that's a pretty good confirmation. And the reason why I marked out this SMT was simply because to reduce the emotion. As you guys know, when you mark the system out, when you mark the OTE or mark the whatever you have, when you mark it out, it will usually reduce your system. You will reduce your emotion because a technical edge is there. But the lesson is, I should have not been in trade at all. It should have been no trading day, because you guys know we only trade 1 to 2 trades a month. Why? I don't know how we got to trade right after we got to trade on Friday. It shouldn't have happened. Right? It should have been no setup. Right? So I'm not trying to be ruthless here, but that's how it's supposed to be. So the lesson overall is, I should have not traded. The lesson is, in a New York situation, if there's an OTE, I only take a trade if the price taps into the 0.50% to 0.86% Fibonacci zone. If I have an entry, but the price hasn't reached that golden Fibonacci range, I do not execute. Execution only occurs when the 0.50% to 0.86 retracement is tapped. I must always see if there's an OT every day. I cannot forget it, because what happened, I forgot to mark out the OT in this case. Then today I forgot to mark out the OE. That's why it led me to taking this trade without me noticing, because I had another setup a couple days ago. I'll give you guys to why we have to fucking mark this, and it's very important. Going back in the chart here, I can show you guys some examples right over here. And this day I had a setup, but there was no OTE here, right? Although you can see, although it did do an OTE, but during that time the agency never did a super high. So I was like, okay, there's no OTE. So I was valid to take that trade to the downside. but market overall went back up high to do OTE. But if you go the next day, which is the day we got fucked on, and I'm giving you guys why OTE matters so much here right now. Let me go get the chart here. So this is why OTE matters so much. We took a short right down here and we got stopped out. Right? We shorted too low. As you guys know, the general rule of thumb is to buy high, sell low, sell high, buy low. Never buy high, never sell low. Buy deep retracement, sell deep retracement. What is deep retracement? OTE. Deep retracement, push down. Right, this is the OTE. So we sold around here, we got fucked, and this was a new situation. Right, so we got fucked. Market retraced to the right amount, then eventually pushed down. So that's one. The next lesson is right over here, another OTE. So if you were to short down here, you got juked. And eventually market went over here. Then it eventually delivered after doing a deep retracement OTE, right? Same day over here. What happened here was that we had OTE. We're supposed to go down. You can see now the market went down to the OTE. Look at the market reflecting out of here right now. So market went down. In this case, today, market had an OTE, but it didn't retrace. But guess what? Well, guess where the market went overall? Back to the fucking downside because OTE did not get met. So market needed to retrace all the way back down. So you can see over here, OTE wasn't there. So market did give us some hope, like, oh, she's gonna take profit. It's not gonna retrace too deep, but it didn't make sense overall in general. So it plummeted right back to the downside because market needed to do an OTE, which it did right over here. So the lesson is, in a new situation, if there's an OTE setup, and then in a new situation, if there's a setup, if there's an OTE, I only take the trade if the price taps into the 0.50% mark to 0.86 Fibonacci zone. If I have an entry but the price hasn't reached that golden Fibonacci range, I do not execute the trade. Execution only occurs when the 0.50 to 0.86 retracement is tapped. I must always see if there's an OTE every day. I cannot forget it. So every day now from now on forward, I'm going to look back on Asian, London, and mark out the OT, potential OT, if there's a potential OT for the day, and I'll do that every single day. Because what I did was I didn't read the rule today, because the reason I didn't read the rule, because I thought I already had it in my subconscious mind, but I fucking forgot to draw it out, right? So I did have it in my subconscious mind to automatically draw it out, but I fucking literally today I forgot to draw it out. So now I'm gonna read it back the next couple months, like next couple weeks, until where it's subconscious for me to where I subconsciously every day I mark out the OTE, potential OTE, because the general rule of thumb is never buy high, never sell low, always buy low, always sell high, buy deep retracement, sell deep retracement, and that's general rule of thumb. And the next lesson is if there's a big range, the big range must have S&T or a soup. And then, I mean, if there's a big range and I have a smaller range, I cannot execute a smaller range unless a bigger range has S&T or turtle soup. Once that bigger range has S&T or turtle soup, I could execute a smaller range with no problem. Otherwise, we can execute a trade. Right? Everything must align in this case. One thing didn't align. And the market fully reversed. One didn't align. The OTE. We had everything correctly, but the OTE wasn't there, so market fully reversed. So this is why it's so important for everything to align. Time will align with price, always. The price was there, but the time wasn't there, right? The time for it to go up higher, which is supposed to go down here, then go up higher, it wasn't there, so market fully reversed. And the reason why I didn't get the trade with a 9% gain was simply because of the rules. I did not want to break my rule, and I knew this was going to be a big fucking lesson on this trade. And yeah, thanks for watching. Make sure you guys like, comment, share, and join the description below. And I'll see you guys later. The big lesson. From now forward, I will every day look at for OT. I will always go look at Asian and London to mark out the OT, potential OT that's going to be there for that specific day, because this OT is so fucking important. Everything fucking must align. Because last time when I took a short right around here, right when I took a short, which one was it? I took a short. I saw fucking too low. cannot fucking sell too low. I can only sell high and sell deep retracements. I cannot sell fucking too low. I can only buy low, and I can only buy deep retracements. Nothing else. In this case, we fucking sold too low. So the market went up higher, did the OTE, then went down. Same thing next day. Next day we're gonna get caught, but you know what I'm saying? We must fucking market out every single day. Because we're gonna get fucked if we don't do that shit. Same thing on Friday, right? So if you're selling around here, you're gonna get fucked. Right? So you cannot sell low here, you must sell around here. You must sell a deep retracement because market will fuck you up simply because of the OTE. Everything must align, and there's a lesson for the day. From now on forward, every single day, I'll mark out the OTE. All this today, the market spared us with gains. It should have been a loss at all. It should have been a loss. I would have been more happy with the loss than this win, right? Although it's a 1% gain, supposed to be a 9% gain. I don't give a fuck about the gain, right? I care about the lesson more than the gain because we're still in our stages where the lesson I'm not too worried about, I'm not too stressed about, money, right? Because I'm fucking making money from crypto. I don't really give a fuck about this fucking money here, right? But this is gonna make me more in the long term because I can't trade crypto on the day trading basis. It's kind of difficult for me, right? And the timing is not there. Well, Forex is perfect. It's perfect. So that's why my focus is to fix these problems, and because I'm gonna add I'm gonna add a 20K account and trade it out and compound it. So that's why that's why I don't give a fuck about the win or loss. I simply want to care about the lesson and never make the same mistake. I never make the same mistake. I will never make the same mistake. Thank you for watching. Make sure you guys like, comment, share. Join us down below, and I'll see you guys later. Peace out.